Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, are there any new breadcrumbs to keep alive the hopes of minority Scandium International shareholders?
The CEO of Scandium International at annual general meeting, in response to a question from a shareholder about more disclosures about what's going on, said, well, you can follow the breadcrumbs in the 10K and 10Q filings. And in fact, there have been some very good breadcrumbs in the 10Q and the 10K, the 10Q especially, but that was for the March 31st 10Q. The June 30th 10Q won't be out until August 16th. So as far as shareholders are concerned, these breadcrumbs that were available, well, they'll just gradually get eaten up by birds and mice and whatever, and they'll be in the dark again, wandering the wilderness, hopefully not ending up at the gingerbread house. But others have stepped in to provide some very interesting breadcrumbs. Rio Tinto has just announced that it has built a $6 million scandium recovery plant at its Sorel Tracy facility within the 6-month period that it planned. And this has a capacity to produce 3 tons per annum of scandium oxide, which is the alloy needed for aluminum. And this is a major incremental growth situation because from Sorel Tracy, they could perhaps get as much as 50 tons per annum. And the design is modular, which means as they build up the demand, they can just boost supply by adding another module to this facility. So this is really good news for Scandium International because its Ningen mine or potential mine, it could produce 100 to 125 tons per annum as a primary scalable scandium mine. So this asset is now potentially worth something, as is the Honey Bugle deposit, which I've modeled as being very similar, if not better, than Ningen, and that would have an equal value. So this company has a latent capacity to produce 200 to 300 tons per annum. So all of a sudden, assuming that Rio Tinto is successful in building out the offtake market of scandium into the 50 to 100 ton per annum range, somebody else, ideally Rio Tinto itself, will swallow up Scandium International and put these Australian deposits into production. So that was a nice piece of breadcrumb to help people say, okay, even though Scandium International can't seem to get a hosting deal done and do its own critical metals recovery program and get its own incremental scandium supply growth strategy underway, at least Rio Tinto is doing it. It's got its act together, and it's now producing scandium oxide. But there was another wonderful pair of breadcrumbs that was published by Barrick through its May 25th Investor Day presentation, which the general manager of the Phoenix mine, Megan Sybil, she did an 8-minute video presentation about that project. And much of it talks about the 10-year life and the 60-40 split between sulfide-derived copper and 40% oxide-derived copper. But then she made the stunning statement about the raffinate study, which was mentioned in the Q1 presentation 3 or 4 weeks ago by Barrick about Phoenix. This time she added that they have now established that they can recover 4 metals from the raffinate, and they are zinc, nickel, cobalt, and scandium. And 2 of them are on the U.S. critical metals list, which is cobalt and scandium. Now, there's 2 important breadcrumbs in this statement by Megan. The first is that the mention of scandium, it pretty much makes it impossible that their partner is anybody else except Scandium International. At the AGM, the CEO blew off a question about could it be somebody else that Barrick is working with on critical metals recovery at Phoenix? but it was always outside chance that might be somebody else doing this, because this is now the big thing, is how can you get more value from all your waste products, especially with critical metals being a big geopolitical topic these days. But nobody else will be trying to get scandium because there is no market for it. You have to develop it. And only a company like Scandium International has developed in-house expertise to make the master alloy and be able to walk the scandium oxide downstream directly to the customer. So this pretty much makes it impossible that the partner that Barrick is working with is anybody other than Scandium International. But the other breadcrumb, which is even more important than the first one, because we all pretty much assumed that it was Scandium International that was the partner, it was the mention of these 4 specific metals. And every deposit has a unique composition of metals, and every deposit that's leached has a leaching agent customized for the particular characteristics of this rock. So if you have a copper oxide ore, yeah, it may have 0.4% copper in it, but the leaching that you develop for it, it will take out only some of the other ones that are in there. And for them to be able to say, given like the 9 or 10 possibilities for which Scandium International listed, for which they have a patent pending application, to mention these particular 4 means these studies are very well advanced. And that's very important, because that means why would Barrick talk about this unless they already knew this was going to work? And if they didn't have a deal in principle with Scandium International as to how this would be commercialized and what the split and obligations would be, why would he talk about this in a way that anybody paying attention immediately can put the breadcrumbs together and realize, wow, Barrick, through the Nevada Gold Mines JV, is the partner of Scandium International doing a critical metals recovery study on the Phoenix SXEW operation. Why would Mark Bristow talk about this unless everything was pretty much in the bag? Because it makes no sense to shift the balance of negotiating power to the other side by putting yourself on the hook, talking about this to your funds and saying, yeah, we're going to do this, and then all of a sudden we're not because the other side won't do a deal. So I think we've got a nice set of breadcrumbs here that tell us a site hosting deal is going to come very soon. It will end up being with Barrick. There will not be a financing in conjunction with it. They'll put out the announcement and wait for the market reaction. And then maybe Barrick will step up and do a strategic investment at whatever the market price settles out and make sure that SEY can continue to or pull its weight in whatever this required to build this, but also to give it a strategic relationship in case it acquires any other copper assets that have an oxide SXEW component, so that it can squeeze value from those using the same critical metals recovery strategy that they look like they plan to apply to the Phoenix deposit, which is a gold copper mine in Nevada, in the not too distant future.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, why is the price of SK Mining sagging just as the Golden Triangle drilling season in BC is about to begin?
Jim, I think the main reason is that the market has gone cool on the resource sector. It seems that this year we have the sell in May and go away syndrome, where you come back in late August, September, when results start to flow. SK Mining hasn't had anything new to report, since the final assays were reported in the first quarter of this year, and they are expected to start drilling a 35,000 meter program, early July, and visuals probably won't be available until, late July, early August, and assays probably not until September. So the market is asking itself, what's going to change? Maybe we can buy it back later. If this whole market is turning so negative, let's just sell our stock and go away for a while and buy it back cheaper. Except they are going to be in for a very big surprise, because in June, SK Mining initiated a Skytem geophysical survey that will pick up EM conductors on the entire property and at 25-meter spacing. And this will accomplish two things. One, it will focus where they need to be drilling in the vicinity of the TV and Jeff targets where they got excellent gold-silver intersections last year. But it will also reveal where else on the property there are EM conductors that have never been looked at. And the reason I'm pretty excited about this prospect is when John DeDecker took on a complete rethink of the geology of the project, he realized that this entire basin, which used to be flat-lying, has undergone at least 3 folds and thrust faulting, so that there are now 3 anticlines on the property. And the main one is the middle one that also ultimately connects to the northern end of this 30-kilometer formation where the 21B zone was mined out, and where Skeena is now developing a gold resource within the rock surrounding the original VMS lens. Now, what's also interesting is that John DeDecker's work, based on the drilling they did last year, made him realize that there were at least 5 mineralizing events where the basin was there. It's a back arc basin. You have the sort of islands moved in from the ocean, and it's created an inland sea, and it was hydrothermically active, and you had 5 different distinct periods where these fluids came up, harvested metals, and then they would get close to the sea within a couple hundred meters, and a lot of times that generates exhalative deposits, which where you've seen the smoker systems, these hot metal-rich fluids being spewed into the ocean and settling down. And the 21B zone is a variation of that, except it's more of a debris flow. But apparently, most VMS deposits, and the very big ones, are what they call more replacement-style zones, where the metals drop out in the sort of stringer feeder zone beneath the ocean surface. When they manage to be smoked into the water, the SEDEX kind that makes those big zinc, lead, silver deposits, those end up being created in this way. But the VMS ones, the richest and best ones, end up in that little area 200 meters beneath the surface. So as he's figured out the architecture of the geology, what it was like originally, 5 distinct mineralizing periods, then the folding and the thrusting, this has now given him a framework to interpret geophysical conductors and design programs. And they've also done a BLEG study which highlighted in the East Anticline an area where no work has ever been done, and it shows being elevated in gold. And also at the southern end in the GFG area, this has lit up in a way that isn't explained by any work that has done before. So we hope to see within the next few weeks an update from SK Mining on what the Skytem survey revealed, how many areas of interesting targets. And the key thing is, one of the things John DeDecker said, I said, I asked him, could you find a 10 million ton version of the 21B zone? He said, well, it doesn't seem like that sort of size potential is there. That 2 to 3 million ton range is probably the limit. But when you look at the geological context he has developed, we're talking about an entire district of these silver, gold enriched deposits. They may only be, 1 to 3 million tons each. But if you end up with a dozen of these at all these different horizons, some may be close to the surface where drilling hasn't happened before, others as underground mineable targets. You have the beginning of what could be an extraordinary new discovery that isn't just one or two high-grade zones, but is an entire district of zones all associated with these three major folds that have wrinkled the stratigraphy, and where there is evidence now that these hydrothermal systems came through at 5 different periods. So I think when the market hears all of this in a couple of weeks and realizes, wow, this is going to be a multi-year play, then they'll say this $400 million valuation that we have now, which is ahead of the game if you're looking for only one 21B zone, and if you haven't found it yet, it's a little bit expensive, but it's the potential to develop an entire district, maybe with multiple 21B zones, and lots of smaller, lower-grade versions that are still worth developing. That's the story that I think will captivate the market and make the SK mining play probably the star for the Golden Triangle this year.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, what's happening with the Picket Mountain project of Wolf Den Resources?
Well, Wolf Den Resources published a PEA last year for a 1,000 ton per day operation ground mine. Picket Mountain is in Maine, and it's been sort of a no man's land for decades because of a very bad anti-mining attitude. But in 2017, they published a new mining reform law which forbids open pit mining, and that's what lured Wolfden to acquire the Picket Mountain project, which was found in the 80s from the timber baron that owned it, and it has the east and west lens. They published a resource estimate in January of 2019, 4 million tons. It's very high grade. It's the equivalent of an underground mine. But even though the PEA came out and said this is stocks should be worth $1 or more per share based on this, the market has said we don't trust Maine. We think this is a fake out. They're not serious about allowing mining. And last year they initiated an application for a change of usage for a 500-acre part where they would put the mine plant and everything to rezone it from logging to industrial use. And they had hoped to have this done by Q1 of this year, but with all the headaches of COVID and with this new regime of rules and that the Department of Environment in Maine learning how it should be doing this properly, this thing has now dragged out, and the first hearings will be in late summer and a decision likely in the first quarter of 2022. So there's been a sort of a 1-year delay in demonstrating that Maine is serious, and this usage rezoning, the reason they published the PEA at 1,000 tons per day was the permitting or usage people, they really wanted to see what everything was going to be like. So they are it's almost as if they're approving an actual mining permit application. So if this gets done, to do the real thing will be fast track. But the 1,000 ton per day limitation makes this also small, and they have been trying to find additional zones in the vicinity of the east and west lens. And last year, their targets A to D didn't really yield anything. Yes, they were able to, extend the west lens a little deeper and fill in a bit on the east lens. And they plan to put an updated resource estimate sometime in the third quarter of this year. But the most we can probably hope for is a 10 to 20 increase from the 4 million, and you really need to go almost to 10 million tons to support a 2,000 ton per day 10-year mine life. So at the moment, this does not look like it is happening, but last year, late season drilling did give them a better understanding of what is the footwall, what they call the footwall zone, which is an older VMS event. It's stacked beneath the east-west lens, and the whole area has been folded almost in upon itself, so that the east and west lenses, which used to be horizontal, are flat-lying, and the axis of the fold has disappeared, and the footwall zone would have been deeper than the east-west lens, and they are now doing a drill program which will try to sort this out, and this had some pretty high silver grades in the intersections last year. So the discovery upside that we're hoping for this year is a better understanding of what the footwall zone is all about, and whether it has a repeating limb farther to the northwest, where they have yet to find the repeating limb of the east-west lens. It may not exist, but they have some suspicions that the footwall zone may be more extensive than the east-west system itself. But that means not a huge amount of information flow coming. The really big development for Wolfden Resources, which is going to drive speculative interest this year, is what they call the big silver story. And there's a place in Maine, they've kept the location secret because they're still trying to acquire additional land. In the 80s, a hydrothermal breccia with very good silver grades and more modest zinc, lead, copper grades was discovered by a prospector-style group. They drilled it, didn't really do much with it. It really should be an open, pittable type of situation, but that's not going to happen in Maine. They plan to go in there and do some drilling and see if they can turn this into an underground mineable story. And Maine is so crazy that even block caving is not allowed because they apparently fear that a giant sinkhole will develop. So different types of underground mining scenarios need to be looked at. But that got the whole big silver play, which they auctioned in December last year, got Wolfden thinking about its holdings in New Brunswick next door, where it has a half dozen projects. Several of them actually tie onto each other and represent about 25 kilometer by 5 kilometer of strike of this prospective VMS formation. And there's a half dozen VMS deposits whose problem is that they are either too small or the grade is too low to be developed. And these were, found and discovered in past decades, and they are this sort of residual asset that Wolfden has, and which was its focus several years ago. But the past work had also encountered these high-grade silver intersections, usually in the sort of footwall of where the VMS deposits were supposed to be, and nothing was ever done with them because they were dismissed as sort of these skinny vein things that would never amount to anything. But in recent time, there's been a lot more attention into these hydrothermal breccia pipes that evolve beneath these VMS deposits and become almost replacement style systems that are silver enriched. And this is the sort of thing that SK Mining is pursuing on its project, except it also has a very high gold grade along with a high silver grade. In the New Brunswick area, it seems to be more of an enriched silver with a more modest gold credit in there. But they are going in there and revisiting these known showings. They'll start to do some IP and mapping work on what they call the California Lake target, and then do a 1,200-meter drill program to better understand it. And the thing about New Brunswick is it's not against the mining law to develop open pit mines. So they are rethinking all these assets that they accumulated as optionalities for higher metal prices. Maybe these deposits might end up being worth something, or maybe enough money will become available to see if there's these things are actually bigger than they were delineated in the past. Now they're looking at an aspect of these systems that has been ignored but could be of economic silver. So they kind of call the one in Maine, they call Big Silver Maine. And this one, I've suggested they call it Big Silver Bathurst to reflect the fact that it's in New Brunswick rather than in Maine. And at the moment, it's still early stage, but this story has potential running room later this year. For now, we're still focused on the footwall zone. They did in 2019 fly a 30-kilometer by 10-kilometer corridor of the formation area that hosts the Picket Mountain project. They identified EM conductors that have never been drilled. They've been trying to nail down deals. They have deals on some of them, but they want to tie up a larger land issue. And the problem with these timber barons is they're busy. They don't really care, so they haven't yet nailed all these properties that they want to secure before they start drilling these targets. But this will be a story for 2022 if this all comes together. And right now, they're also still dealing with the problem that Maine itself does not have a lot of qualified field workers to do exploration, and the cross-border traffic of, say, Canadian geologists and field workers into Maine, well, that's still not happening. So they are content for now to have their Maine people working at the Picket Mountain footwall zone drilling, and to use Canadian geologists to revisit their New Brunswick land package, which has some very interesting potential in these silver hydrothermal breccia pipe area.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.